What is up, guys? Today is Monday, November 4th, and I'm gonna be going over the recap that we are doing today. First of all, we start off the week. A new president's gonna be in tomorrow. So it might be a crazy week. We had no news today, not really a high probability day. So, in essence, I didn't take a trade today. Don't think anyone should have taken a trade today anyway, but, yeah. So starting with, the daily, we had let's start with the weekly. Yeah, last week we had a sweep of liquidity on both sides, taken out of sell side and buy side, and then we still take out that weekly low. We haven't taken out any like this weekly low, so I probably would expect that tomorrow or something, surely. If Tuesday we get to have a tap into that daily, then we're gonna have a daily expansion, a weekly expansion profile, and that would be pretty good for tomorrow's trading. But again, tomorrow is gonna be a crazy day. We wouldn't have, we don't know if there is anything significant going on. Like, price could just, I don't know, go crazy, or it could just be chill, but that's gonna be a low chance, because a new president is getting selected. So anyhow, on the 4 hour we are still in this range. We tap into the 0.5 or the equilibrium area, and we go we sell off from there. So yeah, we also tap into this 4 hour fair value gap, and we have kept respecting it. We closed outside it at London session today, and that would give us a bearish bias on the 4 hour. Let's see, 6 a.m. we have a fair value gap right here, and we did not inverse this fair value gap, which could mean a more bullish price action. But yeah, that's the analysis that I'm going through here. Do we have any new data? We're kind of in between some. So yeah, wouldn't expect much of an expansion today, but that's basically it. You've got another fair value gap here. Take away that 4 hour. So 1 hour, just the 4 hour fair value gap that we did not manage to inverse. We expect higher prices here. Looks like we took out this liquidity there, which is fine for longs, but an A plus setup would probably be if we took out this week's low. Yesterday, previous week low. If we took out previous week low, then that would be a really good longing opportunity. But as I said, with the weekly profile, if we tap on this daily fair value gap here. Then on Tuesday or tomorrow, then we could see lower prices down to here, and we are setting up for equal lows here as well. So yeah, it looks pretty good for that. But again, we do have a new president, so well, not we, but America has a new president. So let's see. Go back to the 4 hour, 1 hour, 15 minute. Yeah, 9:30, 9:45, 10 a.m. starts right here. So from there we'd be looking for a buy. Let's see if we were in a discount in that range on the 1 hour. Let's see. So this will be the range, and we weren't in a discount. Do we tap back into there? We did not. So ooh, yeah, I'd probably say it's a low probability trade. I wouldn't say I would take this personally, but if I really wanted to, then yeah, this would probably be the trade that I'd be looking for. Or this is probably the best trade that I would have in mind right now. So on the 1 minute, 10 a.m. right here, we don't accumulate. I'm not sure if I would count this as accumulation, because we did have another high set in there, but equal lows, we take out those equal lows right here, and that would be a buying opportunity, since we would want a distribution up there. So in that sense, then it would be fine, but still not 100% sure about that. And then no particular order block. I mean, I don't know, I'm not sure if that's an order block at all. I think for order blocks, I think the red candle has to suit the liquidity, not this one. I will have to search that up. So give me a few seconds, I'll search that up. How do I pause? Am I stupid? Oh, alright. So it looks like that it doesn't have to sweep liquidity for it to be an order block, but it has to be near an area of liquidity. For example, in one of the sources, it's mentioned that the market might move to an order block because it knows there's liquidity there. Oh wait. Alright, let's just say it is a little block, because we do have that sweep of liquidity, but just not that area, right? No, just not that red candles. Yeah, and then we got the displacement up here. This is the change in state delivery, and that does look perfect. Wow. Okay, so we get the tap in right here. Oops. Your entry could have been here. First entry at the fair value gap, second entry at the order block. So what you could have done, and then your TP could have been, let's see, these highs, this fair value gap, 100%. Was that 2 a.m. So this is the London high, and then Asia high right here. So your maximum TP could have been there, and yeah, that's probably the entry. Not the entry, the trade that you could have taken for today, which would have been valid, I think. Let's see. Price isn't really looking very clean here, so that might just be if you were to take a trade, so like this isn't my model because there isn't any really like premium discount thing to get off of here except for the 4 hour. Because of that 4 hour, we are in a discount, which is fair, but I don't really trade that sort of, like, I don't use that premium and discount. I use range, tap back into this equilibrium, and then I'd expect it to come down to external liquidity, but I don't usually trade like this, so I'd probably not have that entry there unless I can find an excuse for a premium or discount, but I don't think I can. I guess from here to there, but then again that would be a bearish range, not a bullish one. On the 15 minute, I don't use the 5 minute discount areas or stuff like that. It has to be above or at 15 minute. But yeah, we'd never even tap into that. So the 15 minute probably like this. Nope. Yeah, this is probably a trade that I would not take. Although I probably, will have to research on this later, but there's times where you don't get these sort of trades, right? I'm always seeing this type of pattern, so it's V pattern, right? And it always creates a gap here that never gets filled, so that's probably something I want to look at as well. We also get inverse right here. Not much of a, we get order block there as well, so yeah, I guess you could say that if you use this order block here, then you could say that this was the long, but I don't really like that. So okay, well, yeah, this would be the perfect entry if you were to take a trade today, but TP up here, or on the 1 hour, yeah, probably at the 1 hour fair value gap there, and then like first TP, so let's mark that out. First TP up there, second TP, or rather break even, let's see. Break even could be break even could be like these highs right here, but also could be this fair value gap there. We already tapped into that fair value gap beforehand, so that might be a better break-even spot. And that could be a TP1, this could be a TP2 instead, but yeah, either way this would have been fine. Break even here at the fair value gap, TP1 there, TP2 at the fair value gap here, or this high time frame fair value gap. Either way would have been really good, and yeah, that was a solid trade if you guys would have taken that. Let's take a look at the 4 hour again. We've got a mini fair value gap there that we kind of tap into at 10. Not really a trade that I like. 6 AM close. No, I wouldn't use that one, because this 4 hour wouldn't have been closed yet. You wouldn't have any confirmation that it is bearish at that moment, except for this maybe sweep, but nothing else. Let's see if we had SMT, and I think that covers up the video. Oh, that's pretty surprising. Yeah, so NQ, nice movement. Yes, not so much. Do we get SMT? Doesn't go below that low. Doesn't look like we have SMT. We have it on the lower, the higher time frames. We do. We've got 5-minute SMT right here. And yeah, that sums up the video. Hope you guys enjoyed or had learned something in this video. Yeah, that is a solid trade. We've got AMD, SMT, order block, fair value gap, and then you could have taken along from there. Alright, see you guys tomorrow. Be careful tomorrow as well, and that's it. Bye.